acknowledging the work that the Minister of Finance did with this budget. I think I would associate myself with Stephen, that this for me was one of the best budgets in terms of presentation and clarity. The previous budgets, you go in there and try to figure out what they are saying, you couldn't even understand. I think this one was really, this is a very well prepared budget. But I have a question for you, Patrick. I think from the policy level and the political, we have tried to say, yeah, the things that are happening, the challenges we are facing, they are because of the geopolitical environment, both political and policy. And so I think the feds and what Stephen said for me added to my fear. So I was sitting here thinking and saying, what's your worst case scenario that we should plan for? This is a budget you planned, but then most of the factors that are determining what you do are external. What is that worst case scenario that we should plan for in case things don't happen? The second one is on the question of irrigation. When I heard you say you don't sleep, I thought you were not telling the truth. Yeah, because you see, when you go back to the plan for modernization of agriculture, that's 2000. Because I'm a farmer, I do farming, and irrigation is one of the things that is always on my head because of the nightmares I've gone through to look for financing for irrigation, and you just get lost. So in the PMA, the word irrigation is mentioned 35 times. That's about 20 years ago. So when did you start losing sleep over this thing? Yeah? And I think that goes to the point that our colleague from the bank said, can we translate this into actually delivery? Because this money we could just spend it and we'll come back another year and still report. So that's one thing that I would want to really hear from you. How do we get this thing work? And I'm not blaming you. I think you need to sit with us and we tell you what to do maybe. Because me, I am there. You go there and I am a coffee farmer, and you go there, this is June. I am going to see my coffee drying for the next 3 months, and I don't have an option. And the limitations. And when we talk to government, no, we have put money in agriculture. You know, so that's something that I want to challenge you on. Finally, probably I think this to my sister Patience. We are run by a revolutionary government. I want to propose a radical idea, a revolutionary idea on tax compliance. Because Fred, when you say let's partner with URA, my reading is that Ugandans are not necessarily prepared to partner with you because of the breakdown of trust between citizens and government. We have to reconstruct that. Now, this is my radical idea. I want to propose to Patience and Patrick that we declare a tax compliance month where everybody is supposed to do filing. And we can even partner with Absa. So we see the president come to URA or wherever and files his tax returns. We get the ministers, they file their tax returns. We get the PSSC, the deputy and whoever, they file their tax returns. And then Ugandans will all begin to understand that everybody is paying tax. So that's my idea. I know it is political, but if you can manage it, I think it is one thing that can build some level of confidence and trust in the tax compliance regime. Thank you very much for listening.
Certainly those hands are for you, Godber. Talking of policy and politics, we just have to make sure on that day the president is not in the security meeting. But let's begin with the DST and PSST, those must file. By the way, filing return does not mean you'll pay the tax. You may not have the tax to pay. That's what you file. You file that empty thing and say, by the way, my rentals are still empty, and you tax rental income. I haven't given the income. You file that. Some people think filing, So let's go in for those open conversations and do them. And for some of you who have not been paying taxes, you cannot say there are no new taxes, because the old taxes are going to be new to you. This conversation is very clear. to us. Now, Bidco said things are going down, and it's the demand side really. While we are all optimistic, global growth is projected to slow down. The estimation was 6.1% in 2021, and it was said to come down to 3.6 in 2022 and 2023. Now that has been revised downwards by between 0.8 and 0.2. So expect it to decline to 3.3, and that means a lot to us. As that global growth is going down, factories may produce less. There may be less demand even for our exports. This is worst case scenario. What are we seeing in these figures? Remember, by the way, the budget are estimates. I hate it when people think, oh, you promised me my 5 trillion, where is it? These were estimates of revenue and expenditure. If patients can't catch it, BSC doesn't have it, and you won't get it. So can we have this conversation in a civil way, that these are estimates? So when we hear the global growth going down, and there have been even guys with worse estimates, they have brought it down to 2.9. Global growth will be 2.9. And as Americans begin to disrupt the systems, the dollars will go back to America, and the dollars are not going back to America for investment. They are going to lock them up. So every dollar that goes back to America, because raising interest rates is to actually suck the dollars out and lock them up, to curb the inflation and our inflation as well. That's going to speak volumes for the manufacturers. Mr. Mugiru, what does that speak to you manufacturers? What are the hassles? When the CEO sits on his desk, Bidco has already given us their view, but you represent all the others. You are in the research and policy space. Tell us what is on that desk of the manufacturer and whether the budget has spoken to a bit of that, but how do they intend to manage going forward in that space?
Thank you very much. Yes, the happenings in the world are a concern to everyone, including manufacturers. But as I said in the beginning, manufacturing is not for the faint-hearted. I mentioned that to give a context of what I will be sharing. Number one of the key things that we think that can really mitigate this is mainstreaming our local content in Uganda. And this is something that we think that really the Minister of Finance left out, maybe inadvertently, because we have had a conversation dating way back to 2021 November around a legislation that we need to even out on the uptake of government, especially from the local economy for goods and services. We know for a fact that government is the biggest buyer. North of 60% of the budget goes for the procurement of goods and services. Now, unfortunately, this regulation has not yet come out of Ministry of Finance. And it's a critical thing, knowing that that is the percentage that government actually picks out of the overall budget. Look at 48 trillion and find out what 60% means. That's the kind of money we are speaking to. We are thinking that even if things look the way they do, if we deepened and mainstreamed actually local content, many things can happen, because yes, we are speaking to what the gentleman from Bidco is saying, low aggregate demand. But to the extent that the gravel of roads are meant for the oil and gas sector is not being supplied by the Banyolo, who live actually where this gravel is, you don't expect those Banyolo to have money. This is all it means. And that's why it is very central for government to appreciate that choices have consequences. We need to take a choice of giving people money, and by letting them therefore be part and parcel of the money economy. Because we know that we're doing massive construction, stones, sand, etc. are local available, without a doubt. I must add that where we have had government committed to source locally, we have seen growth. And I want to commend you, DST, for sectors like steel, we have seen tremendous growth, cement, textiles, pharmaceuticals, cables, we've seen tremendous growth because you have bought. The flip side, though, is on when you pay. And when you pay, she did mention it, but I want to go beyond thanking you for the cash accounting. When money has become very expensive, the cost of funds go higher. And therefore, because of the single treasury account, we want to believe that you should be able to insist that money meant for this road actually goes into paying suppliers that did supply into that road infrastructure. So one aspect where we think that we can mitigate is local content mainstreaming. Allow me to mention two others. He mentioned, the gentleman from Bidico, that they are operating in the region of 50% of capacity. And I want to confirm to you that you installed capacity across manufacturing is remaining redundant to levels beyond 30%. In some sectors, to 35% redundant in others. What this speaks to is leveraging real regional markets, especially with the opening of Congo. We have done the roads in Congo. Yes, there is some rumbling over the M123 they call themselves. But we know that that has always been cyclic, and you have provided enough resources for the security sector to deal with them. We would think that really growing exports would be the game changer, because once you know that you can produce and get market, at least utilize better your capacity. It would be so terrible if you operated at 35% because you cannot have market, and yet actually your overheads have not changed, or they are just increasing. But the missing link, again, Mr. Ochaila, in this is the fact that we require an export guarantee facility. And I will tell you why. You remember the story for Southern Sudan? People having to be cleared to go to parliament and get compensated. We don't want to live that way. When I meet an accident with my car, I go to an insurer. I don't look for a politician. This is what we would want to see for business. De-risk exports, because we remain positioned where we are. We are neighboring to Congo. The other neighbor to the north is South Sudan. We are volatile. We have boots in Somalia, which means that we could actually export into Somalia, because we are one of the greatest group contributing countries. We have not yet done so because we do not have a facility that facilitates this. Friends, what you see China doing and many other developed countries is that they have created these facilities, which is why they can take on credit for exports. If I did so, I would have challenges with URA in terms of accountability for my financials. So it is important that actually we have this facility, because it allows us to then export. We cannot have terrible circumstances in the world and we do nothing to mitigate them. We think that if we did that, we would really, it would change our fortunes. The last component, again for you, Mr. Chaira, it's good I sat very close to you. And I'm seeing what you're writing. The most important, really, for government to be able to stimulate the economy is in the area of strategic investments. Yes, you are putting a lot of money available for agro industrialization. Great. But let me tell you, this is not the first time we're having some money, and we have not yet seen impact. The value proposition we want to put on the table is that, yes, we acknowledge that we're a private sector-led economy, but government must increasingly play a bigger role. And the role we would want you to play, especially through UDC, UDB, and other agencies, would be for you to create a pipeline alongside the private sector of strategic projects that are critical for turning around our situation. What am I speaking to? Yes, we may not be having enough cooking oil, but I want to tell you that we're producing 3 billion liters of milk right now. The processing capacity is anywhere in the region of about a third, 1 billion liters, meaning that we have 2 billion liters of milk that can be converted into ghee. Yes, in the absence of cooking oil, can we have a project that can deliver this as a mitigating situation? Because that keeps players in these various value chains performing well, but de-risks you in terms of having to wait for when Ukraine is stable and when Moscow has discussed and agreed to be to the table, because that is not in your control. And you need to pick a lesson from what we saw with COVID-19. You remember we had a glut on sugarcane, trucks being blocked at Malaba. You remember that story? When manufacture of sanitizers came in because of COVID, the story has since changed. I think from a private sector space, we would want to see really a pipeline of these projects where we can do syndication, government participating through UDC, and players that have galvanized capacity coming. And I'm glad I'm here because of partnership. Thank you, sir.
Thank you very much. That's the private sector giving conversations. But sometimes you want to spin things around the other way. Let me sit in DST space. If there is too much milk, why can't some of those cattle farmers follow the market signal and move into coffee? Because if the price is low, the price of coffee is going up, and those guys go into coffee. But it's a partnership. We want to have conversations in a market environment. Because sometimes you don't want to sort out the problem the market is supposed to sort out. The market has told you, you guys, get into something else. So there are many ways of killing a rat, and I told you quite often I'm in medical school to understand from the doctors. Because when I go telling them I have a headache, I have a wound on the leg, they ask me to lower my trousers and they inject me. I'm like, but that's not where the problem was. I told you the wound is on the leg down. So how does an economy work? Really, sometimes we go for where we think the problem is. But medical practice has an information behind how the human body works. So sometimes it pays to say, where is the problem? And this is a conversation I've had, that maybe the problem for milk is not in processing ghee. Maybe it's who is buying the milk? Before you process the ghee, are the Kenyans ready for it? Is there a market? So there are bigger conversations we want to have here. How do we de-risk the export sector? What is our insurance like? And I hope I have my friends from insurance in the house. I'll look for one deliberately later on. Can they insure the Bunagana risk? Because I believe they can. Rather than us going to DST, there is a market in this house that is supposed to deal with some of those risks. Must we get everything? Again, my friends from Naro may not be here, but I'll spend time looking at agriculture. I told you I'm in Makerere University in all colleges. Some of the research they are working on is how do we get drought-tolerant varieties? Because they know drought is the order of the day. Because you may even want to irrigate and the swamp dries. So what do you do next? You have a system that cannot get water. But there are drought-tolerant varieties out there. There are pest-resistant varieties, faster maturing, higher yielding. This is the language of the National Agricultural Research Organization, and is funding them. So we want to bring more solutions on the table as we go forward with the budget. I left that seat empty, not that because it's supposed to remain so. by somebody who deals with a lot of things, talking about digitalization that URA is doing. NSSF has done a lot of digital spaces, and they move lots of things and monies. Patrick Ayota, you're welcome. He had to step out for some reason, but that is your seat, sir. I could not fill it. I had to preserve it for you. The Deputy Managing Director at the National Social Security Fund. Now you know what I'm talking about. Talked about when elephants move, you listen, and you make way. These are big monies moving, but that's not the question for you as of now. We started with a round of what did the budget mean to you? What does it mean to you as a person, but also in the space where you operate? So there's a blank check. If I can't afford it, I'll send it to NSSF via Absa Bank. You have your 3 minutes, sir.
Thank you very much. Mr. Chailap is my boss, so it means I have to be very careful that I can critique the content without critiquing Mr. Chailap, which is a thing. One thing that happened was actually was very heartening in the budget. When the minister read the speech, there's a section, and he mentioned it, agro-industrialization, standardization, quality standards, then market access and entry. I think as a country, we focus a lot on the first one. We are trying to do quite a bit in agro-industrialization, not enough, but we are trying to. The part that we were failing as a nation is market access and entry. And I'm going to use 2 examples. I'm going to talk about Kenya. Now, please, not that I don't like Kenya. Kenyans gave me a wife, so they are my in-laws. A few years ago, 2 years ago, 3 years ago, our milk that was ready, had processed as much as good, was stopped at the border. They sent a team to come to confirm the source of the milk. That almost died to the ground. Up until December last year, there was a tax on eggs. And that tax was lifted after a president had negotiated with the president of Kenya, but was reimposed this week. Now, you think through, the president said the pillars of PDM include things like do poultry, do all these things. The market you naturally sell it into, which is Kenya, deliberately closes that market. And then as a government, what should we be doing? I think that to me was the missing gap, a practical solution. And if you go back to the various budget, we've actually been focusing a lot on agro, in the supply side of this business. Now, Mr. Chailat is an economist. I am not. I'm an accountant, which means I'm allowed to criticize economists. You know, economists work by holding everything constant. Then they relax one factor, and they give us an economic theory. That should work when everything else is at constant. You've got a war in Ukraine, you've got inflation, you've got COVID. None of these things are constant. So the theories we are throwing out. And the thing I think, Mr. Taylor, what the private sector is really saying, and then that's what will come as a necessary. Because I'm one of those guys who say, let's not just mourn and cry. Can we pick up from where the government has done? So part of what we need to do as a necessary, and this for us as a company, we have a mandate now that we need that coming through COVID, everybody needed to have a savings. It was really important to have a savings. So through the amendments, basically NSF space for anybody in Uganda save was open. But you must have the willingness to save and the capacity to save. So now it has become very important for us, and we're joining the PDM, that how do we intervene in this value chain so we can improve the income of that farmer so he can have the capacity to save. And the pilot, we did say that your farmers will actually save up 10% of their earnings. So part of what we're trying to do with NSF, and I'm trying to deploy the resources, and in fact we're in touch with the minister through the PSST, is we actually need to create, and this now, I'm a capitalist, but the all I grow with a social conscience. The markets are inefficient. I mean, if we rely on the market to signal, they're inefficient. Yes, the market is in Kenya, but the inefficiency of it allows things to be blocked. And as a country, we need to take this fight to where the market is. That we create a national company almost going back to the old produce marketing board, coffee marketing board, that had the muscle to say, no, you are not going to put a tax on our eggs, because if you do, we'll return it. And if we do that together, then that market in the Congo, in Kenya, in Somalia, in Southern Sudan will open up for our farmers. And if we do that, that is actually making the field fair, which we need for market access. Anyway, but that to me, I think is a part that we can actually play together for that purpose. Thank you.
Quite interesting from the Deputy Managing Director of the NSSF. Good to know that the Kenyans haven't capped his investments into Kenya. So they are very selective. When it's money from NSSF, that one is welcome. When it's eggs from Uganda, that one is not welcome.
Yes.
And we see in the ESC. And remember, we have been marketing this region to bring in investors, do railway lines, do power, consumption will come up because they have a big market. And people from Europe and Asia and the US have been looking at this market. Now what do they see? CNN is headlining that. Bunagana, people who don't even know M23 is not a country. If it was Rwanda, I mean Ukraine and Russia, you would know who to go to. What is M23? But there they are, they have captured the space, and we're still trying to sort out those. So the region still sends things that are not constant. So our economics, what is constant and what is not constant seems to be increasing. Kenya also has an election coming in on the 9th of August. We are watching that space. It has hit us before in the past. Amidst all this, we're supposed to be paying the taxes. And one of the issues that came out, compliance. The taxpayers, 50 million per day? Patience, people need some patience from you. If I go native to Agumye means we want to give you the comfort. How are we going to manage this? Give them the comfort. They are partners, so we are partners. How are we going to go? You have your slot too. You know, really, what do you want to tell the taxpayers in this room and those out there? And by the way, for my panelists, with cameras out there for those people who are out there who you want to emphasize a point to.
Thank you so much, Doctor, once again. So our focus here, compliance is a key issue. Our compliance levels in Uganda are really low. And here I would like to applaud my brother Godba, and I think he deserves a round of applause. Please help me and clap for him. Because the idea that he has brought on board is what partnership is about. It is not just the URA's duty to collect the taxes, but we need everybody to be in this conversation. So Godba just hit the nail, because that is what we are looking at, that once people are able to see that everybody is complying, right from the top leadership, then that does have an impact. And I can assure you that many times as the URA, when we go out to sensitize the taxpayers, one of the things they even ask is, what are our taxes even doing? But who is actually paying the taxes? So we've had to come up with a campaign where we even involve my supervisor, DSC, and say, please come along with us on this journey of sensitization, because you need to explain to the public, you need to be accountable. The revenues that we are collecting, where is government putting this money? And we have seen that messages like that indeed do have an impact on our compliance. We have a tax register that only has 2.4 million taxpayers. Now that is very low, and we have increased it over the month. But we are saying that even that is very low if we are going to make inroads in making sure that we collect sufficient revenues for DSTR to be able to pay. So we must be able to internally to find ways and working with different partners to see how that tax register must grow. And one of the things we are looking at, of course, is having the discussions with UMA, for instance, but also within the government itself. How do we use that data, the third-party data that is within or that is held with the different government institutions to make sure that everybody indeed who is supposed to pay tax is registered? Because we do not want the burden indeed to just fall on the shoulders of just a few. So this has to be a deliberate effort that we are working on in making sure that that register grows, because indeed the tax base must be expanding. But there are also other streams that we as the URA indeed that we have not focused on, and here we are making a commitment that we need to change. E-commerce. E-commerce, through the coming of COVID, we saw business thriving, because indeed that was the only way, which was the safest space to be able to even continue transacting. But the question was, are you actually even targeting these people? When you talk about, my brother from the bank talked about Amazon, does the UR even have that visibility? Do you even know what is happening in the space of Netflix, for instance? When payments are being made, does the UR even have visibility in that space? And there are lots of transactions that are happening therein. So we have started the journey, we have started having the discussions with some of these online players. We've had discussions with Apple, for instance, Amazon. So we've started and saying you must make a contribution as well. So we are trying to see how best indeed they can file their returns. That was one of the questions that they came back with and said, yes, we are willing to pay taxes, but you must simplify your systems as well. We are not going to file, because the first time we said, can you file? And they said, we are not in the manual space. So definitely that cannot work. So we have to retreat now and say, how do we actually make sure that we facilitate them to be able to pay the taxes? So we've had the discussions which are going on very well. We have had a simplified, we have designed a form that is simplified where they can indeed be able to file their returns and make the payment. So those are some of the things that we are looking at, but it is in a bit of let's make sure that we collect revenues from other streams that we have traditionally not been in to be able to make significant contributions towards revenue. Compliance, of course, the culture, like I said, in Uganda, unfortunately, sometimes we have to use a stick. Yes, the penalties, my brother, yes, they were included. We had to increase some of them, but just to deter non-compliance. And I'm hoping that none of my friends in the room will fall victim to that. But when I look around, I know these are the compliant taxpayers, so I know I am safe. But it is in a bid to make sure that, yes, in as much as you have the legal side on you, that yes, you can use these powers, and as a Commissioner of Legal Services, obviously, this still falls in my docket, that when you're going to pull out this enforcement measure, you must get the clearance and the discussion. But I want to assure our taxpayers that as the URA, that is not our first call. It is not something that we take pride in having to invoke these penalties. We do not. Because when you do that now, you create this bad relationship. And I'm glad as well Godba talked about this, that you must build that relationship or that trust with the taxpayers. You do not build trust by simply harassing them all the time, by simply issuing the penalties. That does not work, because what you do then, you get into a friction with the taxpayers, and that affects their voluntary compliance. So we have said that yes, they might be in the law, but that is not our default mode. So we need to find ways on how indeed we can drive compliance. For me, voluntary compliance is the key. It is not the forced registration or having to issue all these warrants and the issuance of agency notices that is going to drive or get the money in the bank. That is not it. So we are trying also we have rolled out initiatives that are much friendly, like the alternative dispute resolution. The background to some of these initiatives really is that we need to change our face as the URA. I would want you to look at me and smile at me, and not when they hear the URA. I know our Commissioner General, he likes saying that the first time when people call him, when they get a call from him, the first question is, what have I done? And that disturbs the taxpayers, but it also disturbs him. He says, how can I call people? Probably I'm following up where I want to say, thank you, MD Absa, for making a payment. But when a call comes through, it is the CGRA, it is definitely the first thought is, what have I done wrong? So we must be able to change that. So we are confident as the URA as well that there are things that we must change in the way we administer taxes. And my dear supervisor, DSC, we are working on some of these things. So alternative dispute resolution, when it was rolled out last year, for instance, we were able to collect 364 billion shillings here, 364 billion. Now that as well was in recognition, and these are amounts that have been stuck in the court system for a while. And here you'll allow me, a doctor, to be able to explain that, but it just shows you where we are moving and some of the changes that we are making. Because we had these cases in the court system for over 7 years, really. Because the default then was the URA issued assessment, the taxpayers does not agree. So they have a right to go to court, rightfully. And then some of the cases would win at one level, but we'll still push further and go and appeal. But then we stepped back and said, how long are you going to keep these cases in the court system? Because then it is not sufficient. We are not collecting the revenues. Even the taxpayer is not able to get probably what they're entitled to. So we say, why do not create a mechanism where you can actually have a discussion with the taxpayer that is a win-win, that you're able to sit around the table and say, where did the URL go wrong, or what are those areas that the URL did not focus on? And through that discussion, then we were able indeed to collect significant revenues. But for me, most importantly, from that initiative is the fact that then you have improved relationships with the taxpayer. And it goes back to the issue of voluntary compliance, that you then have through the discussions, the taxpayer is able to recognize that indeed, maybe this is where I went wrong, but I need to find a way on how I can work best with the Uganda Revenue Authority. So those are things that we are working on and making sure that we roll out some of these initiatives, but with a hindsight knowing that what we need is to have better relationships with our clients, because then that is the only way they are going to pay voluntarily. That is the only way they are going to be our two partners on this journey. And lastly, I want to talk about, Dr. if you allow me, on the issue of incentives. We do have incentives in the law that have been there, but they are tapped on two main areas. One is the use of employment. We need to encourage employment. We have such a big problem in the country of employment. So we have said that for you to get a tax exemption, for instance, for 10 years, or even exemption from VAT, you must be able to show us that you're investing in these strategic sectors, but that you're employing a significant number of people in your business. The other one is the use of the local raw materials. And I think for me this is even where the PDM comes in. Our taxpayers are struggling to even get these raw materials really local. And I think it relates as well to what my brother is talking about, the local content. What initiatives are we putting in place as government to make sure that all these, they are able to get onto the market, but find the raw materials in place so that they are able indeed to take benefit of the incentives. So it is one work area in DSC that we need to continuously work on, because these incentives are there in the law, but they are targeting particular sectors which government has highlighted. Areas like agro-processing, that is very key for a country like Uganda. So we must make sure that our farmers are facilitated, the issues at which the farmers are raising indeed are being taken care of, but at the end of it all, the taxpayers are able to get these materials which they are going to use to be able to pass that test that we've provided for in the law. But I think it is one area that is a good starting point as government, but we just need to see to make sure that the environment indeed is very under. For me, PDM, I think it is one way we are going to work towards that, in making sure that indeed these taxpayers are able to take benefit of these incentives which have been included in the law, to make sure that we spur development in particular sectors. Education is another one. You have the health sector is another one. But for me, particularly, I think agriculture is very key. And I'm glad that even then, even in the budget speech, there was a lot of focus on agriculture. And as government, we just need to facilitate and make sure that we do support our taxpayers to take benefit. And lastly, I think Godba will work on that compliance mark. Like I said, excellent idea. So it is something that I will discuss with my boss, but it is something that I believe indeed will give us mileage. We should be able to work on that, because indeed that is what developing Uganda together, like we say, VRA, is all about. We need everybody on board to be able to make a difference in our nation. I thank you.
Thank you very much, Patience Wakumia, Mrs. and Acting Commissioner General, URA. Her other portfolio, the regular one, is Commissioner Legal Services and Board Affairs. Now, please lean more on the Board Affairs, because compliance is a Board Affairs issue. Once you fail there, then she will invoke the legal part of it. So please, let's visit her more on the Board Affairs. If you are unable to pay, reach out to them. Let's have a conversation on what are the issues. When can you pay? I think URA is more interested in you paying the taxes for 2027, more than even the ones for today. So they want to work with you, that as you pay, you don't die because you paid taxes. It's a stream that we want to look forward to, and this conversation is how can we do it. And I can testify, when I get into my emails and it's from URA, I'm like, okay, what have I not done? But that has changed. Because the other day I received a phone call, and this time it was the same URA, and we're having a conversation. And I really passed on that good message to the Commissioner General. I said we would want to have more of these. Before your staff send an email, let's have a phone call. Because the email is information asymmetry. They don't know what I know, but they are sending me an email. Can we first talk so that the email is reflecting the conversation? These are the patterns. Congratulations, URA, for moving up to those levels. So I think it is happening. But when should the month be? We are going to have a conversation with the DST, because the month must rhyme with the financial year. You don't want to put the compliance month in July when the financial year closed in June. So it should be the months before we close the year. Let's comply, maybe in April, maybe in March. When should we comply? But that's a good thing that has been picked up, and we're going to continue gladly with those conversations. I'm going to park a conversation so that we can go and listen to Absa Global. But my next on the panel will be my friend Kaboyo. So I'm going to give this to you so that you begin to think through it. A lot of financing, people look at your neighbor to the right, the banking. Yes. They look at banking. But when we are in school, we talk about debt equity. How are the equity markets working? Because a lot of people are going to the banks with the wrong reasons. These are things supposed to be financed by equity. And then they blame the banks, and yet they went to the wrong facility. Fortunately for the courts of law, they will say, thank you for your filing, but you filed in the wrong court, and they send you away. When the bank sends you away, you complain and say, they didn't even listen to us, but you should have gone to the equity markets. So Mr. Kaboya, I want you to speak to the equity markets, but first, are we ready to run? A friend of mine called Jeff. I spoke to Jeff yesterday, and Jeff was in cyberspace, talking about digital spaces, and Jeff will come in on cyberspace. Meanwhile, you can greet your friend. Just find out whether the person who sat next to you is known to you. It's also about networking for business. That's not Amazon, that's a physical person next to you, as Jeff comes in.
It's important to note that the global economy was expected to slow in its growth this year and next year and the periods going forward. In 2021, the global economy grew by more than 6%, but a lot of that was catch-up from COVID. So some slowing was expected, but major global forecasters have been tripping over themselves right now to continue to reduce forecasts for this year and next year. Part of that is, of course, Russia, Ukraine. We're seeing the pressure come through on food prices globally and oil prices globally. Part of that is around China and the zero COVID policy, which is not only interrupting Chinese growth itself, but also throwing significant sand into the workings of global supply chains. And then, of course, there was the issue of rich country overheating. Labor markets, particularly in the US, but in parts of Europe, getting so frothy that wage growth was already very substantial. All of this together has generated lower economic growth than previously expected. All of this generates higher uncertainty and financial market stress and volatility. And all of this is generating higher inflation and higher global interest rates. And the risks to all of those things, frankly, look to the downside, sort of more risks rather than opportunities. What does that mean for Uganda? Well, maybe positively, if I could start that way, probably a greater focus on opportunities in oil and gas, as much of the world looks to wean itself off of Russian supply in particular. But many of the other factors here are undoubtedly a more challenging environment for a country like Uganda. Higher inflation globally is likely to lead to higher inflation domestically as well. That's going to generate pressure for more government support. We see regionally sort of requests to do something about sort of fuel prices, increasingly that'll be around food as well. And of course, somewhat lower economic growth just reduces the fiscal space and raises some of those pressures to intervene. There's going to be a greater focus as interest rates rise. There's going to be a greater focus on debt sustainability, right? And that's true for corporates as much as it's true for government as well. And then maybe, let me just put that out there, in an environment where things like global aid flows can be important to some of the outlook that we have in the region, I've got to imagine that two things are going to come out of the current global environment. One, more money is going to, in terms of global aid, is going to need to be directed towards specific food programs, and those will go to the countries that are most needy. And we see that elsewhere in East Africa in a substantial way, less so in Uganda. And an awful lot of global aid money is going to need to start focusing on reconstruction efforts in Ukraine. So frankly, it feels a little bit early to talk about reconstruction when it looks like we're in for a rather lengthy and difficult combat there. So I can speak on behalf of the research department at Absa, probably a little bit short of the bank as a whole. But let's be clear, right? As inflation rises globally, as rates rise globally, what is this going to mean? It's going to mean that dollar funding for everybody becomes more expensive. That's relevant for government and some of its larger projects, particularly infrastructure. That's relevant for some of the larger businesses in the country as well. And for choice, probably less financial inflows from the rest of the world into Uganda, which will lead to some pressure on the exchange rate, some pressure on term sort of shilling interest rates as well. But more broadly, I suppose the message here is that we've come from a couple of years of really heightened uncertainty. And we're just coming out of the worst of COVID, and now suddenly we find ourselves in an even more difficult global market in terms of the economics, at least. Into that uncertain environment, businesses, quite frankly, probably need to take quite a cautious approach, particularly around things like financial leverage, as funding becomes more expensive and at times more difficult to secure. But let's be clear here, right? There are still plenty of opportunities out there. I mentioned sort of a renewed focus on oil and gas, but more broadly, throughout the COVID period, and I think into the next couple of years as well, East Africa as a region, Uganda as a critical economy in that space, can be one of the shining lights of sort of growth and opportunity, being able to demonstrate sort of a diversified economy that's growing faster than most around it, that's growing faster than the globe itself. That should generate attractive business opportunities. Let's say just an environment where one's cautious about leverage, recognize that interest rates are likely to be higher than they were before, but also open to those opportunities. Well, listen, I think we've touched on much of it, right? This is less about the environment that we find ourselves in domestically, either in the region of Sub-Saharan Africa or East Africa or in Uganda. And this is very much about trying to navigate a very difficult global space. It's a space of lower growth and more downside risks. It's a space of interrupted supply chains. It's a space of uncertainty, higher rates, higher funding costs. That's the environment that we find ourselves in. At the same time, right, because inflation's higher, the demand for governments to do more is going to become ever larger. This is difficult to navigate. We're fortunate that we're here in Uganda, that we're in East Africa. We're in a part of the world that has been growing faster than most in a sustainable fashion, but it's a more difficult environment, and all of us are going to need to navigate carefully.
Thank you very much. That's Jeff from Cyberspace giving us the terrain. It's going to be bumpy road ahead, but it's possible to navigate through. And this conversation is about how do we navigate through. I'll get back to the audience and pick out some 2-3 interventions. You see one here, and then 2 there, and that is so far for now. I'll pick those 2, and then I'll get back to my panel. Let's try to be brief and get as many as possible. Thank you, Absa, once again for making this possible, to turn on people's world out there, partnering with NTV. You have your
Thank you so much, Doctor. My name is Agnes Sembo from UN Women, and I'm representing the country representative. First of all, I would like to appreciate the government for a very progressive budget, given the context that we are living in. Having said that, and from the space where I come, and in the context of leaving no one behind, when I looked at the budget, this is what I felt, because we are giving opinions. Whereas the budget looks quite progressive, both in terms of strategic investments, but also in terms of trends for growth. I was looking at the different categories that were seriously affected during COVID-19. Okay, I was looking at statistics, looking at teenage pregnancy in this country. I was looking at women that have been seriously affected by GBV. Okay, and then I was looking for areas that have been ring-fenced to strategically address the peculiar needs of these groups. Because a good budget should be reflected in the quality of life of its people. So I was looking at, if you asked a person with disabilities, what does this budget mean for you as a Ugandan? I was just asking myself what response they would give you. I looked at the 30% allocation under PDM, where we've lumped all vulnerable groups, persons with disabilities, the youth, the women. Of course, the women still have quite a range of packages that they can benefit from when you look at the budget, if only they are well mobilized, informed, and prepared to access. Because what is likely to happen is that those that are already doing well and informed are likely to benefit more than those that have been systematically excluded. So I was looking, I was requesting, of course, I know supplementary budget is a language that the government doesn't want to hear at all. But progressively, going forward, I was requesting that we need to ring-fence strategic interventions that can reach out to those lives of people, the most vulnerable, that are likely not to partake of the different packages that the government has put in place. That didn't seem to come out well in the current budget. But over and above, we are quite excited. There are quite a number of opportunities in the region at continental level. If you look at the African Free Trade Continental Area, broadening, widening up the market space, if we strategize and do the right things and put in place accountability measures, put in place strategic targets to demonstrate that we are progressing in terms of evidence, that would be very, very helpful. Thank you so much.
Thank you very much. Leave no one behind. That's a message from the UN women. Now, he's not representing the UN men. You have the floor, sir.
Thank you, sir. As a business person who's been running operations in this country for 17 years plus, the revelation about the number of taxpayers in the country actually makes me understand why for the last 6 months I've had sleepless nights from URA. We're living in a disrupted world where COVID disrupted all of us, and so when the government is putting pressure on URA to collect more taxes, yet we only have 2.7 million registered taxpayers, which is 5.7% of our population. It means that this little group of us here sitting talking about the nation, we're less than 20% of this population. We're carrying 90% of the population. So the government is expected to deliver services for 90% of the population from 5% of taxpayers. That is unsustainable. So it goes back to kind of understanding a way that maybe this year we stabilized and said, over the last years, we've been experimenting. Every year we try a new tax, it doesn't work, we bring a new one. So let's stabilize now. But the next important thing is let's create systems that enable us to collect taxes from the rest of the population. If you look at the Ugandan population, at least 20% of the population can spend between 150,000 plus per day. Another 20% between 5K and 150 a day. 60% of our population is spending between 0 to 5,000 shillings a day. But they do exist. So a logical approach would be, even if you say let's tax 1,000 or 3,000 or 5,000 per day, for about 20 per month, for about 20 million of that population, there is enough money. But when we ask URA to squeeze the business people who have actually put in a lot of effort, what happens at the end of the day? We go out of business. When URA issues an agency notice, which they have to, it affects the supplier base. So if the supplier cannot actually supply a bigger company 1 month, second month, the big company also dies because we rely on the suppliers. So if my suppliers are on an agency notice, which means I cannot pay a check to them, they can't pay their salaries, they're not going to last more than a month. Then we have a system, glad that government has actually announced that they will pay. But we have a system where we have to pay taxes every 15 days. But we have contracts that say I'll pay you 60 to 90 days. Right? Now that creates a bigger issue on a cash flow in a market where you're borrowing at 20 to 30%. Then, if I'm doing a contract where I have a commission, there is no way I'm going to do a deal on a service and I ask for a commission more than 10%. So ultimately, we're running in negative cash flow with the audacity of hope that we're going to make it to the other end. Half of us survive, half of us don't. So I think, as we say no new taxes this year, let's understand how do we widen the tax base, because otherwise it's unsustainable. Thank you.
Your name, sir?
So my name is Badru Ntege. I'm also a board member of Private Sector Foundation.
Thank you very much. I think we've talked about this. COVID taught us one thing, that COVID anywhere is COVID everywhere. So even as he talks of one half survives and one half goes away, even the other half that survives is not likely to survive for long. He talked about the manufacturer and the supplier to that manufacturer. But remember, that supplier is taking it from the aggregator, who is further downstream. And eventually there is a small producer. So the whole chain needs to work. And we're going to have a conversation. We're talking about 2.4 million, and congratulations for raising that tax register. It was 1.5 million a while ago. But the 2.5 million is deceptive. When she finally walks to each of those 2.5 million, majority of them fall below the threshold. But she checks them and really they are below 10 million their returns for the whole year. So she can't tax them. That's the only blood. You don't donate blood when you are anemic. They will chase you away. You actually need blood. So we have to have a conversation, and that's why I sat them next to each other. How can Absa help those registered taxpayers to grow their businesses so that the reflow continues? And I'll pack that question later on for Absa to answer at some point. But I packed a question with Mr. Kamoyo on equity market. He's also speaking really, if Absa is not financing, is equity financing. What is the equity space like? It's about financing private sector, not just budget. It was about the budget of government. It's just how many? 48 trillion? Ours is a 162 trillion economy. So where is the other side? It is with us, guys. And we need to see how we finance ourselves so that we can finance it. Mr. Kamoyo,
thank you very much, Fred. Fred, I think the two main channels of financing any business is debt and equity. Now, on the debt side, my friend Moviro is here. Mumbai is over there, and a number of other local banks that do business in the local market. Now, when we talk about equity, and I want to just direct it to the private equity, not the equity market, so the stock exchange here, which has remained small and no potential for growth. Let me focus on the private equity space. Private equity has become a very important segment of global financing. In the region here in Uganda, we attract the least private equity funding, precisely because of a number of factors. I want to pick around 4 of them. And the current debate surrounding some of our local entrepreneurs who have run into trouble is very relevant to this discussion. Now, why do we attract the least private equity funds in this economy as compared to Kenya? One is lack of indigenous risk-adjusted projects or businesses in this country. The majority, when you look around our entrepreneurs here, family-owned businesses who do not comply or conform to proper corporate governance. So when you get a questionnaire, and where I see we do a little bit of private equity by trying to encourage these funds to come into this market, the questionnaire that you get is about corporate governance, compliance, disclosure, and all that. Very many businesses in Uganda would not qualify. So the credibility of our businesses here are very, very critical. The second issue is protection of property rights. The current debate going on here, which is putting a question to our judicial system. Our judicial system not properly understanding the implications of their judgment on the whole financial landscape is a big issue. And perhaps on this one, I would like to ask my brother, DST, take this up with the powers that be, that our judicial system is letting us down because their judgments throw a lot of dark paint on Uganda as a destination to attract international capital. So that is very, very critical. Perhaps going forward, we need a workshop or a seminar and take these judges through what the implication of their judgments are. Because really, for anybody today, when you go to sell Uganda, say we have a hospitality project here that needs $5 million for investment. Said, look, how can we come there when we're not protected? Tomorrow somebody is going to deny that he took the loan, and the courts are saying, injunction, don't move any further. Related to that is collateral management. The collateral management system in this country, the discourse that we've had around that has really not been effective. So even I think Mumba can tell us they must be having challenges with the collateral system. You borrow against a collateral that perhaps is in the hands of about 7 other lenders. So how do you protect your rights? So those are challenges, but locally, because we need to deal with these issues, finding local solutions. Fred, when you said on your right, I also looked at my left. This gentleman here has capacity to do private equity, set up a private equity fund. The NSSF has that capacity. They have done it, scratching the surface, but I think there's a little bit more to do. So we need a conversation with my friend here, to be able, Patrick, to be able to push that agenda forward. Thank you very much.
Patrick, the question that will be coming to you has been set by your neighbor, but don't answer it now, think about it. But you have a question from your neighbor. Terence Tumwine, where are you? You know, sometimes you have names that mean Nkwine. Tumwine means I have him, so I can't let him go off. He's from the Capital Markets Authority, and we're talking about that space. And rightly, as Kaboy has indicated, that market is not really doing what we expected 22, 25 years ago. So what is happening there? But I'm also going to have this conversation with the staff, Mr. DST, come next week. We've been working on it. But Mr. Tumwine, what is it that you have to say? You have 3 minutes.
We celebrated 25 years last year as the Capital Markets Authority of existence. There are many challenges which have been highlighted by my colleague or my friend Stephen Kawoyo. My name is Terence Tumwine. I work with the Capital Markets Authority representing Keith Kalejera, who is currently in a board meeting. Private equity is our bread and butter, is why we exist, among other reasons, in the equity space. And there are many challenges. And we try as much as possible to educate as many businesses as possible on the opportunities within the capital market space. Now, he's talked about the challenges. There are quite a number of challenges. He's not even talked about the regulatory environment. He's not even talked about the taxation issues. those I think my boss Patrick is aware of, that are affecting private equity. But I just want to inform the meeting here, as well as online, that these issues are literally being addressed. I know that there was a meeting at the Presidential CEOs Forum trying to appreciate this thing called private equity. What is this thing and how can we tap into it? It's so much that Patrick can do. I actually feel for him because everything is Patrick, Minister of Finance. There's so much he can do, but there's so much money out there that literally wants to get into the economy. So what can we do to be able to trigger this money to come into the economy, to invest into businesses like Bitco or Pickfair, and to address the challenges that we're facing. So one, on the side of government, I literally want to give kudos in the budget speech. They mentioned they are financing UDC, the private equity arm, that shall be able to buy into businesses. Now, it has already been offering debt, but they are offering another arm. They can be able to help grow your business while ensuring your corporate governance is growing, while ensuring they're teaching you on some of the basic standards on reporting, ensuring that they're filing their taxes well. So all this is a line of growth that UDB shall be doing. Now, for UDC, I want to make a suggestion, is to allow the Deputy Director, NSSF, to focus on collections of people who are earning whatever they earn, and let them focus on that. How about if they raise the resources, and then they give them to UDC, and UDC does the business of looking for investable businesses. I suggest that they don't enter the arm of private. They're already doing something with Pearl Capital and a few others. But how about if they give this money to UDC, and then they address the issue that my friend from Omaha has said, to invest in strategic investments for the government, on behalf of the government, and exit at a point that they shall desire. And that's our suggestion to the NSSF. There are issues. URSB has things to do to sort around the Partnership Act, as well as the Companies Act, which affects private equity immensely, and the taxation issues. I know that the Ministry of Finance is doing a whole broad appreciation of the taxation policy and how it's affecting the economy. And there's a study that we did, I think we presented to the Ministry of Finance, and they're well aware of the issues that private equity firms are facing. But I must put confidence, if there's anything to put, that there's so much investment that's being done in Uganda. I want to quote Agaseka Lala on one of the webinars I listened. Sometimes when businesses keep quiet, it's possible that they're okay. But sometimes when they complain, is when you know that they're being pinched. But some are actually comfortable. I mean, they don't have to go on TV and say, we're really comfortable, but they are managing, and they have been able to stay in the economy. My submission to you, Fred. Thank you so much.
And to this audience, thank you very much to Moime, that's Capital Markets Authority, giving us the view from the other side, but also showing they have already submitted something to government. And we are going down to Patrick Ayeta. They have said you're scratching the surface. You are also into the real estate, which is also critical for bank lending. What are you seeing in those areas, the real estate, and besides the judicial decisions? Is collateral still out there? You have your space to tell us from where you see it as Deputy Managing Director of Multi-Trillium.
I will share with you guys the mandate of NSSF, and I'm glad, I think all of you are members of the NSSF. NSSF is a basic pension scheme. In other words, when you hit 55, your expectation is that money is there. The way pensions are constructed in any economy, I'll take Singapore, Malaysia, or the US. You've got the basic social security fund. In the US, it's called the social security. Malaysia, it is the employee provident funds. On top of that, then you layer another scheme, which is called basically, usually those are employer-sponsored plans. And then on top of that, you have an addition which is individual plan. But there's a serious mandate with the basic. The basic plan, the major thing you look after is safety. Because when you turn 55, you want to know that money is there. So we get countries like the US where they've made a resolution. The US Social Security Fund cannot invest in any asset other than US Treasury bonds by law. They can't even invest in the equity market, the stock exchange. Singapore, 98% of those investments are held in Singapore issued bonds. Why? Because there's an implicit guarantee for those funds. NSF Uganda, right now we hold around 78% in bonds, 15% in equities, and then 7% in real estate. That mix of investment allows us to basically meet our commitment to you. And there's an implicit guarantee in that when you turn 55, your money will be there. It means that we can't get into every space that every Ugandan thinks we need to get into, because safety trumps return. Is one of the biggest responsibilities we have as a fund. And the reason why we could pay mid-term as when it was needed is because the investments allowed us to do that. Imagine if we had to pay mid-term and we do want to liquidate a lot of the assets because they were in illiquid assets you get. But we tried our best. We have the yield fund, that's a 20 million euro fund, which is done in partnership with the European Union, IFAD, and basically it provides both equity and debt. But there's a space I want to share with you, which I have actually gone into. To me, it's very exciting. It doesn't expose the fund to a lot of risk, but has a lot of good. Director Chalak will say this. If you look at the way jobs are created in this country, or in an economy, the ecosystem of jobs basically has got 4 stages. Ideas, somebody has a wonderful idea. They pilot the idea to figure out, will it work? They commercialize the idea, will somebody buy it? If those 3 are aligned, they scale it up. Now, in the scale stage, my friend Michael Absa is waiting. You come there and says, you know, my friend, bring your 3 years financials, auditors. You have them because you had some experience. The management experience, you have the books. So give you a loan. In the commercial space, there's a bit of money from venture capitalists and private equity. In Uganda, the idea stage has so many ideas. Kampala alone has got 24 business incubation centers. But what happens with that? All our donor partners come, what do? Train, retrain, build capacity. The problem is after that, then what? So all the good ideas, or potential good ideas, they go through what you call the value of the pilot stage, because nobody's putting money there. So Michael is waiting for the best ideas, but there's not, so we use the word there are no fundable, bankable projects, because we've not done what fed them. And I decided to do something, and this was with the partnership with Massacre Foundation. Let's get into this space, develop there. Where somebody just sits on a little money, $20,000, $30,000, to pilot their program. And we borrowed a model from the Y Combinator in the US. Many of you, if you know Y Combinator, inject $25,000 in startups, in this startup pilot stage. 12 years later, they funded 2,800 ideas. But some of the products we use today, some of the household brands we use today came through that. WhatsApp, Reddit, Uber, Dropbox. The name we used because somebody was willing to put $25,000. So we started a program called the High Innovator. Identify these potential ideas. Inject up to $30,000 with it. We funded this February, we funded 27. The amazing stories that come out is amazing. Want to do 500 over the next 5 years in partnership with that. We hope if we do that and we have a success rate of 10%, and we have 50 companies 10 years in the road become the KCBs, the Absa, and so on, we then have changed the country. But we do it safely so that we can actually create the jobs that are needed. So we are doing our bit, but we're doing it understanding the mandate we have. The last thing you didn't say, I know one of the biggest cultural problems we have in this country. There's a big company, medium-sized company, 100 billion shilling turnover. It was family owned. We went to the gentleman, he's 73, he said, you know what? Allow us in. We'll take 40% of the equity, give you, I think at that time the thing was, the valuation of the company was around 500 billion. We're willing to put 50 billion shillings because it was actually a good company. He got excited. It was so wonderful. It was so. He went back home. Apparently, we didn't know that. At home, the wife is the co-owner, the daughters are co-owner. So the bedroom politics took over and so on. Before they realized, apparently the wife was keeping the books and so on. Hey, if you allow NSF to come in now, what's going to happen? So we have this thing in Uganda where Uganda are going to have 100% of what they own. They're not willing to know that 100% of $1 billion shillings is much smaller than 50% of $1 billion shillings. And one of the things we have to work through really for us as Uganda, these things about partnerships, joint ventures, so that you let go. Because the business will not grow until you're willing to. Because then it opens up you and become transparent that now Mr. Michael can actually do that. And we've tried that, and it's difficult for us as Ugandans actually to really trust that and make it work. But otherwise, today the gem in Uganda, I can actually tell you, one of the gems in this country is NSSM. Managed, governed by Uganda. So if anybody tells them we Ugandans can't do things right, tell them they're wrong. And the DSA, I'll just tell you, we did a projection with amendments. If you look at Singapore, Malaysia, South Korea, China, they took off and became Asian tigers when their domestic long-term debt, domestic long-term savings was 30% of their GDP, which means they could now borrow and utilize domestic funds to engage the economy. The NSF holds 12% of Uganda's GDP, and that's our only long-term domestic savings. With the amendments, we think that over the next 7 to 8 years, we can actually escalate that to come to around 25-28%. In which case now, if you want to build like Karoma, locally we can fund the first $500 million. Then you go to the Chinese, negotiate on strength because you have powers to do that. Thank you very much.
An interesting insight for us, knowing that NSSF is putting at least their stock 78% or thereabout into the government bonds. The question comes, when these get into government, do they remain long-term? Because these are long-term savings. If government is committing them to payment of enhancement of allowances of people have heard and read about in the papers, that's not going to help us. So we're going to have a conversation that if it is from long-term savings, keep it to long-term investments. So fungibility of resources is going to be capped, and we'll take this conversation to where it belongs. Because that's distorting the market. It's not the market that is the problem. It is us who are a problem to the market. But this market is exactly where Absa trades on a daily basis. Michael, what do you see in the market? How are you going to help? Especially some of these fellows that you are assessors and they are unable, but they get to know their business problem. Is it possible that we can have a partnership to say whoever is below the threshold, send them to me, and I will see how to help them cross the threshold. But you have your slot to tell us what is Absa doing in the market.
Thank you very much, Fred. I think just to take us back from the budget speech care of COVID, we did see lending rates drop, at least up to April. And if you look at the performance of the industry, we actually lent out more money than the GDP growth. We grew our credit by 6%. So we are in it with the business. If you look at the credit relief, we restructured 7 trillion, which is 40% of the industry. In other words, as a banking industry, we were willing to come and negotiate, reorganize ourselves because of the circumstances. My friend on the left has talked about the Fed, and I wanted to give some perspective to this as well. As an industry, we have lent out about 17 trillion. 5 trillion of that is in foreign currency. So generally, you're going to see a cost come through. And about 3 trillion of that is coming from lines that the banks have had to receive. So it's clearly telling us the perspective of what we need to deal with. And I know before I even get into the Absa space, a lot is talked about interest rates. Interest rates are a factor of what government is willing to borrow. If government is willing to borrow starting with the 15%, I need to put through the cost of recovery. We talked about the judiciary, the implication of all the cases that we're talking about, the fact that even during that time when margins were dropping, loan loss rate was about coming to 5%. So clearly there was pressure on the banking industry. And we need to make this money. But what are we doing? And on top of the collateral, the land tenure systems that we need to work through. So for us as Absa, the first thing is, let's think about our being here today. We've decided to build relationships with our customers. Just to understand, what does this budget mean? Can we connect with you and build that relationship? Do you understand the times? Can we connect at that level? We created the SME Academy. And one of the things, if you look around the problematic cases and so many things, is the aspect of character. We talked about transparency. These are things we need to develop, the governance around how we run businesses. So those are things that we are trying to discuss, ensure that our customers connect with. The vulnerable groups. I think it starts with the culture. I'm happy to say that we're one of the few banks that have a chairperson who is a lady. And that boils down to how we treat ladies. So those are factors that we look through and try and ensure that our vulnerable groups are taken care of. Risk management, interest rates, it's going to be tough, but we have the opportunity to come in and say, look, it's going up this way, the currency is going up this way, you expect maybe so many dollars. How can we provide a constant rate for you? Let's have that discussion with our markets department. And those are things that are taking place today. The value chain banking, the number of corporates in the room, and some of us have talked about the fact that we're having challenges with our supplier, they fail. We want to loop that relationship. How do we ensure that we can bank your suppliers, provide credit on top of the business that you're giving them? So let's loop that relationship. I'm also happy to say that as a bank, we were voted the #1 best learning company in Uganda by Prudential HR Awards. And what are some of these things happening? We want to be the best employer. We want to go out and ensure the scholarship schemes are happening. So we want to ensure that we are part of the capital development of this country. So those are some of the aspects we are doing. My last point in terms of what we are doing, there's a shift in the digital space. I should say about 80% of our transactions today are online. And we've had partnerships. We shall be rolling this out where for you to access our services, you won't need airtime. And we've gone behind the scene to say, let's pay for that if you don't have airtime. So we want to do that. And we're also facilitating people that are ready to work to ensure that they're able to prepare for employment. We've partnered with Airtel through the Public Libraries Board, and we're able to facilitate that. So what are we trying to say? There are challenges in the economy. We need to meet somewhere. We need to have those conversations, and this is part of the conversations we are having. Thank you.
Thank you very much, Michael. You've really said something that maybe the neighbor to the right will get to know. Paying for airtime when we are paying taxes. And that comes to the extreme neighbor to this side because she doesn't generate her own money. She's financed by the Ministry of Finance. The other day I paid my taxes. I didn't need the URA, I just needed their website. I logged in, filed my returns, they talked back to me, and I paid my taxes in a bank of my choice. It's that easy. So when I hear Absa saying a lot of their transactions are going to be online, that again speaks to many more challenging times ahead. Where is the human being going to be in the future? Where are those tellers? Where are the fellows who have been running these things as human beings? Because online does not pay rent. Online does not go to Cafe Javas, doesn't eat cassava, it only eats data.
Yes.
So where are all those other fellows? Online doesn't pay school fees. So really the future is reconfiguring. And we don't know what it's going to be like. And one person who has really tapped into that reconfiguring future, even not being a millennial, is Eli Karhanga. We are going to listen to him briefly. He had a longer conversation for us, but we are running short of time. I'm mindful that I need to release all of us to get back to our other half of the day to do other things. But let me invite in Eli Karhanga from wherever he is online. He's ready to go.
Thank you, Mr. Moderator, Dr. Fred Muhumza. As you say, my name is Eli Karhanga. I'm chairman of Private Sector Foundation and the trustee of the Chamber of Mines and Petroleum, among other things. I am privileged to participate in the budget discussions of this morning. I want to start with complimenting the Minister of Finance and the President in particular, and Cabinet and Parliament for this budget. We have now reached a 48 trillion budget that is never heard of before in our country. The second compliment I want to give is that as I grew up and participated in the economy of our country, budget day was always a surprise day. Everybody went on standstill to know what's going to be effective from midnight to night, as the minister would say. This type of surprise is no longer there, because from February, March, April, May, June, all the stakeholders participate in making the budget. And I'm glad that Private Sector Foundation was in the forefront at every regional level, district level, in proposing what we wanted to see in the budget. And I thank government for involving private sector while they were formulating this budget. I also thank the past parliaments who made sure that we legislated that we have a budget committee which would be looking at the budget throughout the year. So these are very fundamental things, and the fact that the region read this budget the same day or thereabouts is fantastic. Because now the surprises are no longer there. Now, having said that, I want to make some important statements which I want to be responsible for. One is that this 48 trillion is supposed to be contributed from taxes and other things, borrowing and all that. But who is paying the taxes? It is the private sector in the main. Who makes the decisions, final decision on the budget? It is the public sector, it is government. Private sector, yes, we were invited, but the decisions are government, the final decisions. So, we want to share this cake in that decision making. That's one important statement I'm making. So that we can not only just contribute, but also be part of the decisions. And I'll give some examples as we go along. The second point I want to make is that when you are making a budget involving National Planning Authority and all the people that I've been mentioning, you must consider the circumstances that surround you. You are part of this world economy. So at the moment you are making that budget, you must study the going zone of the economies of the world. Do they impact on you? Do you impact on them? The economies of the world are so strong now that politicians take a long time to appreciate the impact of world economies. The war between Russia and Ukraine, and if you like, the European Union and America, is so impactful on Uganda that our budget is so badly influenced. And if you don't take this into account, your budget is doomed. Because Ukraine, 44 million people, the same population as Uganda. They have impacted on our economy here in Uganda and in East Africa and in the world by just food, grain, oil, sunflower, steel, COVID, 2 years of shutdown completely disorganized the world economy. And you saw the impact. Up to date, we have so many people unemployed who used to be employed by private sector. We laid them off. The banks are running with non-performing debts. Borrowers, private sector borrowers, cannot pay the loans. We are now beginning to put our act together, and you saw that our GDP the growth had gone down, and now it's beginning to pick up, and now we are threatened with another wave. And you saw what happened in Shanghai, in Shanghai, in China. When they closed the whole place for a month, and when they opened like that, people are running like you have never seen, trying to buy something in town. So when you are making a budget, you must take this type of things into account. You do not say, we need to increase our salaries in parliament, we need to increase our salaries for chairman of what else you want. This, you have to look at the global situation. We were thinking that we can build a pipeline to Tanzania for about 4 billion. Prices for steel have changed. For shipping have changed. If it comes 5 billion, we will not be surprised. So our expectation of profit from that is going to be totally different. So, world events. Second is regional events. When you are making a budget, look at the regional events. And we looked at the regional events.
That is Eli Karhanga asking, have we looked at the regional events? And this discussion. We're saying it's not capped in stone. If there is anything certain about the future, it's uncertainty itself. So we're going to keep asking these questions. He had additional things to give to us. We're going to share them with you. You can reach out to us so that we can pick his full message. But also there are other people who have been giving us some voices. Solomon Serwanja was asking about what we are doing with the reserves to stabilize the shilling. I think the shilling is a bit stable now compared to the previous week. That's the role of the central bank is doing out there. And when the capital flight begins to go in response to the Fed, what our reserve is going to do for us. Can we deploy them? They will deploy them, but following monetary policy processes and procedures. My colleague will come and tell us, are there any other people in cyberspace? Remember, we are here and they are also there because they are also here.
Thank you so much for your contributions, those of you that are joining us online. Now we do have Walter King. Walter King is putting out a comment. We are seeing government adding a lot for palm oil planting. However, whatever is there to present is only seedlings in plantations. When will they show us a fully grown plantation that we can depend on? That is Walter King that has sent in his comment. We do have Daniel. Daniel on YouTube, he's saying the minister talked about minimizing intragovernmental mandate wars. He's asking a question. Can we have a determined and focused synergy effort between BUBU and the PDM?
Questions from out there, but there are also other voices that are part of this conversation, so we're going to hear what are the other voices, and thereafter we'll get back to the panel to give us your wrap-ups. But let's first hear more voices from the communities out there. Courtesy of NTV.
I'm Dr. Agnes Atim Mapea, Woman Member of Parliament. I'm Molata District. I'm an economist. Of course, in terms of the paper and the talk, it is supposed to focus on the economic recovery of our country after the COVID and also the war. I would have expected that for us to support recovery, we need to do about three things. One, we need to pay off what we call the debtors, the domestic areas. That as a country, we have a lot of areas for our local contractors that we've not paid, almost 4 or 5 years. Now, if we had made a deliberate effort to pay off the domestic areas, then you would see money circulating in the economy from our local producers. The second issue that yes, this budget may help in the recovery is the investment that we put in this SMEs, small and medium enterprises fund, which is going to be in UDB. We've also recapitalized UDB. We've also put in money in the micro support center. But above all, the Paris development model is actually one of the very strong moves in recovering the economy, because if you send 100 million per parish, you're sending money to the economy. The community is going to use this money to purchase, and so you are kind of increasing the purchasing power of the community. You're also increasing the productivity of the economy. So in that aspect, then, you're also kind of addressing that. Now, the other thing about the third issue is investing in the production and import substitution, so that where we've lost in our forex exchange, we are able to invest locally and address some of those imports kind of deficits that we had for the last 2 years because of the close of borders and all that. So I've seen also a move towards that, where you're seeing, for example, of course, little investment in the whole sector and all that kind of stuff. So for me, those are the three key issues I picked from this budget as a move towards the recovery of the economy.
The solution for marketing in Ugandan products, for me, I believe, is in ensuring quality. Our Ugandan market is filled with so many counterfeit products, and generally there is a lack of trust because of lack of proper regulation. There is a lack of trust of some of us from abroad, because they have established their brand and reputation. So the need for government agencies like UNBS to be facilitated and funded to certify all Ugandan manufactured goods, and to make sure that and trust, so that the public can build trust in those brands, because our local goods are usually much cheaper. But also we have a segment of the Ugandan market which is very mindful about their health and well-being, especially in urban campus and urban centers. So sometimes they will go buy something more expensive as long as they trust it.
Counterfeits out there, sometimes you just don't mind it, but it is very, very dangerous. You know, you buy headsets and they work for 3 days and they go off, but because you bought them at 5,000, you just go and buy others. So you think that should be the norm. It definitely cannot be. We have had a very long conversation and we have another 15 minutes to close. So before I go back to my panelists' wind up, I want to begin with the DSC. You have listened, you have not talked, you came here to listen, me and you came to listen really. What have we had? You have some 10 minutes to tell us what you've had from this conversation. Thank you.
Yeah, thank you very much, moderator, for this wonderful participation. And I think as I started, I said, let us communicate. Can you give yourselves a round of applause, even when we are in for these wonderful ideas? They are very informative, and we're going to take, if not the majority of them, then all of them. I'll start. There are about 7 issues that I want to respond to in this wrap-up session. Number one is the issues from Godba. It was a very big challenge. What's the worst case scenario, and how do you intend to deal with it? I think the worst case scenario, in my view, is the raise up of interest rates in the US and the Euro economy. I think maybe today or one of these days, the Eurozone will equally announce a measure of about 250 basis points, 0.25%. So globally, that would be about an interest rate increase internationally of about 1%. And indeed, the consequences of that are what was described by both the Absa participant and then Mr. Kaboyo, and I think touched on by Mr. Patrick Ayota as well, is the outflow of the inflows from the offshores who are participating in our market and also bringing in foreign exchange. That has got the impact of, I know Mr. Kaboyo attempted to indicate the levels, but deal with the response to a rapid depreciation of the shilling or a rapid increase in the interest rate. I think let's keep our fingers crossed, continue watching that space, and we shall rely on the Bank of Uganda judgment to deal with just. But from as planned already in the budget, have some domestic participation in the domestic market without crowding out the private sector. Because a further borrowing from the domestic market certainly worsens the private sector participation in the market. And I think that's the last thing we want to do in terms of mitigating the impact of these adjustments of interest rates abroad and the consequences on the economy with respect to imported inflation. Of course, the worst case also is that we might have to, unfortunately, cut expenditure. And the first culprit usually is non-recurrent, which we should not demonize. It is the fuel that's necessary for us to make the economy work, and it goes on for the payment of the salaries and wages, pensions, etc., and also non-recurrent for government to do the work. And most of the current expenditure actually is in areas of what we already say is a priority, security and such operations. So further cuts on the budget are certainly a disaster for the program. So that's my worst case scenario take, but I think the debate continues. PMA, certainly from Godway again, had talked about the irrigation and why is it that I don't sleep now when PMA was there 25 years ago. I think the ideas cannot die, and I think we have come to realization that I think given the climate changes and all this, it's now time for us to start. We have started irrigation schemes, and there are quite a number of them which have been completed, but also on a bigger scale. But what I'm talking about is mini irrigation schemes using climate smart techniques